The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Thank you to our hosts for those great shows earlier on, and I hope we can keep that standard up right here. The Dow is up 21 at 19,570, all-time highs. S&P all-time highs 2243, up 178. Comp index is up 19 at 5413. This is incredible action, and the VIX is down at 12.11. Most importantly, you're looking at the E-minis here. This is leg D. I'm calling it leg D. In the daily chart, this is the ESZ 16, because now we have a divergence between the continuous contract, got smoothed out, and the actual contract for December. So it's at 2242.75. This is very interesting. You see this right here on the right. So on the left is the daily chart. In the middle is the weekly chart in leg F/A. That's one is really negative and the other is really positive. Well, it'll smooth out. It'll resolve itself. It's nothing to get excited about right now. Everything has to start off in the smaller time frames. Hey, smaller time frames on the right here, you've got the 120-minute chart. Did make another peak D. What's a peak D all about? Let me pull this across here. I'm going to do this every time. People keep saying to me, "Oh, we can't believe it." When I did the webinar, we did a live thing in the webinar the other night. This is the 3-part webinar that I've been giving. The first one was on Tuesday night. You can still sign up for it because it's 3 parts and it's archived. So you'll be able to get the Tuesday night edition. It'll be archived on your page right through this whole webinar series. So this is the look of the Chapman wave. You identify a low bar and then you immediately count each successively higher peak A, B, C, and D. That's the core simplicity of the waveform. Can get complex once it gets to D, but even then, there are certain parameters that I teach that we can look at that are really structural and integral to your analysis and to your trading. Now, what's really important about this is, look, you're in a D in the daily chart of the E-mini. You're in an alternate count in the weekly, but the weekly is at 94% in the stochastics, so far that's really good. You'd have to smash down from 2243 down to 2160 to really negate all the strength here. And the 120-minute chart is very good. And it's saying we're getting into an area of resistance. But I'm going to run this now very quickly because tomorrow's Technical Friday. I'll get more into the technicals. I just wanted to show you for the 10-minute chart. I sent this to subscribers this morning to show them, and I showed it in the den as well. I have an expression that says, rectangle formations can last a lot longer than your patience. In this particular thing, I will give it to my subscribers later. I hope I can do it today or tonight, to explain this Chapman wave technique called the Chapman wave instant restart, fabulous technique that takes you to a brand new buy mode to yet another D or E. And that's exactly what the 10-minute E-mini did. This is the December contract. And then it just went into a trading band between about 2234 and around about 2240. It just stuck there. It went to peak A, B, C, D again. This is the third D that you can see just in the space of a few hours. And now look at this. It comes back down. It goes trough A, trough B, trough B, trough. Let me type this in. A, B, C, D. Another D. And then it starts to move up and it goes peak A, B, C. And I just need to check this out. I'm absolutely sure that I had parallel highs. 50, 50, 50, yes. And then it went to C. And it looked like it was going to D. It kind of made a D by quarter point. It's just hard. I've never seen actually a pattern like this. Then it plunges and breaks the support in the rectangle formation. And lo and behold, it starts a brand new buy mode that goes A, B, C, and it looks like we go to D if the E-mini can go to 2244. Isn't that interesting? I mean, isn't that a nice technique? If it fails, it fails. But look, the magnet of this rectangle is just, it's formidable until you break away from it either up or down. All right, I just wanted to show that as part of a technical tool, and I'll be discussing more. Hopefully, I'll have time to go through the explanation for subscribers, especially new subscribers, to my opening call, to go through that, the wave count. And the reason why I did it, and we need to go right now to the daily Dow. What I had said for subscribers in my newsletter every day, very, very comprehensive newsletter. Look at this. I start off with the Dow, and I'll go to it right now because it's all part of what I wanted to do today. So here we are. This is what I discussed. This is one of the longer little preambles I gave for the whole thing for the day. This is the daily Dow. And I discussed it. Why? Because I wanted to explain that the mid-caps were still in leg B, the MDY, that the IWM was still in leg C to the upside in the Chapman wave, and that there's a chance that we might, I didn't even put it in because I just wanted to see what today played out like. And what I had said here was we've got a 1-to-1 pattern. You see that purple line? You see the rectangle? You see the purple line? I drew this in a long time ago, and then we broke out. It was quicker than I anticipated. We only managed to get long the Dow up here, but at least we've been long for at least, 2 weeks or so. And now, so what's within this context, we're looking at a market that has gone with a chance that this isn't an F in the daily, it's an F/B. Which means we might have a Chapman wave instant restart. We could recycle into next week to go higher. I mean, beyond comprehension that we're doing this at this particular time. But the charts are indicating there's a lot of strength. And what I said here is I would not be surprised if today, there it is, there is a doji-type digestive candle. And that's going to be really important. And then I showed something that's even more dramatic here in the 120-minute Dow chart. I have a technique that I call the Chapman wave 5. It has nothing really to do with the Elliott wave. The idea was stimulated by Elliott wave and someone I had met who was just an absolute Elliott wave expert, one of the few I've come across anywhere. And I include some of the names that people would recognize. A tremendous Elliott wave enthusiast who came across my Chapman wave and took one of my courses about 8 years ago. And I said, wow, all those little complex things that you get in Elliott wave, they started to become much clearer with the Chapman wave. So I went back and I had studied Elliott wave. I just confused the heck out of me. That's the reason why I use letters, not numbers, because I didn't want to confuse it with the Elliott wave. And then I started to get some clarity. But I found that the rules in Elliott wave, for me, I had to bypass them. And I have this thing called the Chapman wave 5. And you can see this. In fact, if I can go live, it'll be even more important here. Let me show you something right here. I'll just scroll back to show you how many Chapman wave 5s. Now, I didn't get each one perfectly because sometimes I have to move the line a little bit. But you can just see 1, 2, 3, 4 going down. There's your 5. This is the 120-minute chart. Oh, it's being covered. That was a 5. That little line there is the circle of the 5. Then it goes 1, 2, 3, 4, 5 again at 18,934 is the 120-minute chart down. Then X starts the new one. 1, 2, 3, 4, 5 at 19,152. It pulls back very quickly. Flattens out. Surprised me. I call this an X, but I wasn't expecting that it would actually work out. And it goes to 1, 2, 3, 4. And then it goes to a 5. Right here from yesterday. Look, yesterday when I sent out my newsletter, that was the close. And I said, I'm expecting that if there is a rally, it's going to be a surprise rally, and it will go towards the top part of the upper channel, the inside track. And it broke right out. So this is 5. And what I said is I expect today to be a doji type day. And maybe we pull back Friday. It's important Friday. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So let me just show you the S&P cash index right now. It's a 5-minute chart. Remember, this is the one I used. It only trades during the market day, and it left yesterday at 4 o'clock right there where that vertical line is. It hadn't made leg D. And I'm expecting in the Chapman Wave methodology, remember I showed you the chart, D's are what we anticipate. Doesn't mean you always get them the majority of the time. There's a D, that makes an instant restart. There's a D, that starts a brand new buy signal to buy mode. And what did we get this morning? We got the D. And now what we're doing is we're making a little double top right here. So I put it down arrow. Here, if I was looking at the MACD and stochastic, maybe we'll grab one in a moment, you'll find that they are starting to fail right here. And this is the Chapman Wave drop bucket formation, the double top formation that you'll find. And that's in Chapter 22, Slide 366 in my CD introducing the Chapman Wave methodology. And it failed to make a new high. And that's going to be very interesting what happens here, because the theory with my double top pattern, this is the inverted H, right, says that if the price goes from the top to the bottom of the lip on the left side to the bottom of the cup, 50%, there's a real good chance it's going to go down to the bottom. And it needs to hold at 50% and then break under it, and there's a good chance it's going to touch the bottom. But if it holds steady, you can make another U-shaped pattern. So this is very important. Maybe I can just grab a chart right here. Is this a 5-minute? Yeah, 5-minute E-mini. This is at ES. Let me go to the ES Z16. Oh, no, we want to look at the S&P, SPX cash. Look at it right. Oh, there it is. So there's the MACD. The MACD is deflecting lower. The stochastic is still very strong at 84%, but it is pulling back. So the next couple of bars, and I'll just give you numbers on the S&P. The S&P closes under 2,240 in the next, during my show, next 30, 40 minutes. That'll be negative, and it'll probably test lower than that. And if it just holds steady, it'll have one more jab to the upside. So this is a very important moment. A question about Lulu. Yes, Lulu's spiking to the upside. I'm looking at this and I'm saying that the RTH index is doing very well, but it's not at all-time highs. Let me just move this away. This is the 120-minute chart because you want to be looking at the monthly. Monthly is still holding pretty well. I'm suspecting that retail stores are going to, the bricks and mortar are going to do a lot better this year than Amazon, and it's hard to believe. But I was, my wife and I went, we were just checking something out, and we decided we'd take a chance and go to the Natick Mall here in Natick, Massachusetts, near Framingham, between Wellesley and Framingham. And it's always chock-a-block. This time it was chock-a-block. They've changed the driving and parking situation. You have to follow paths and all sorts of things like that. They've got barriers and all sorts of sheep herding barriers. So what we're looking at here is that Amazon is doing very well, but it's not doing as well as it always does. And that says to me that the retail is probably going to do very nicely, but they're all going to siphon off one another. So overall, I would not be surprised if sales are very good, but profits are not quite as good as they anticipated, because the sales are amazing. Now, Christmas time, they have sales, huge sales. Okay, nitty-gritties. Let's get to the IWM. It made a leg C yesterday. Hugely. Oh, it's continuing that leg C. That's the Russell 2000. We are long, been long for a little while now, and it's doing very well. 137.37. I was asked yesterday by someone who has the options, the call options. I said, "Hey, it still looks very good, but if in the morning, this morning, it gaps up, take some profits on your options and try to keep some for Friday, because this could be very exciting." So it is very exciting. And the monthly is broken out. This is 2017, should be very strong. The weekly chart, I have to call this B. This is not a G. There's nothing here that says G at this particular point. So this is very good. The QQQs are stalling. No, they're up 43 cents at 118.79. Even more important than that, if there's any chance that the Qs can break above 119.66, that's good. Not good enough. The Qs need to get to 122 in December. If they do that, that's going to be extraordinary action. Now, I know that a lot of people are talking about yesterday was kind of a blow-off top and we're getting extremely overbought. I'm suspecting that there are tons of people and even more funds and hedge funds that just are completely blindsided by this whole thing. It just was so quick that they haven't really got in. So any really sharp decline, I think, would be a buying opportunity. My thinking here is that we're going to run out of steam in this phase, and then there could be like 6 weeks or 8 weeks of just nothing, just pulling back. I don't know if we'll smash to the downside or what. The weekly says no smash to the downside. But what I'm thinking here is that there's a real problem in that we are just now stepping in over the last, I'd say, 2 weeks into the phase with the public. I'm actually having people say to me for the very first time, what about the stock market? People who since 2009, 2010 have really done absolutely nothing in the stock market. Suddenly they're getting interested. So this is going to be very important. Okay, let's go on, and we'll talk about gold. Gold is just not doing anything right now. It's just really, it's quite pathetic. But wait a minute, the dollar should be, the dollar is rallying. Made a low C today and leg C, and with a whopping move. Good, I like that. We've been waiting for the dollar to, this is a pattern that's very familiar to me. And I couldn't wait. I wanted to say, I'm surprised that the dollar is that weak. It was really weak yesterday. And then this morning, it was going down to the 99, what is this, 99 something? We've got Scott in Safety Harbor. Hi, Scott, how are you?
Well, I mean, you can imagine with my ex headed towards 40 how I feel.
So let me just go through this, folks. USX is trading right now at 36.85, down 64 cents. It's in leg D, red candle. This is the first time that I'm going to be saying to you, now you've got to be very careful of USX. I think it's done for now. maybe there's a little bit of residual strength, but I would not be surprised if we are looking at, look at that.
I got out about an hour ago in the 38 range. So
fabulous. Excellent.
I started this thing, as you know, when it was about $18. My question for you today is about Facebook. And
Facebook.
I would like to know how I've never done an option in my life, but I'm working with so much of the house's money now. I'm going to just do one for fun. I know for a fact that Facebook will be in the 120s very soon, and soon for me is within weeks. I just wonder what the charts say about it, and who would you recommend to help me set up an option?
Okay. So this is what I'm going to be thinking about in terms of Facebook. I think that Facebook has had a huge move from the 133.50 peak E level in, that was October the 25th. And it's come sliding down to the 113s. It's trading right now at 119.25. I'm very familiar with this pattern. It's the pattern I call the lowercase h that goes to a lowercase h that goes to a lowercase f. Give me a moment. I want to draw a couple of lines here, and then I'll give you what I think could really be a very nice trade. But I'm going to also tell you that as an option, I'm going to move out towards I might even move towards February. Let me do a little work on this, and we'll be right back with Scott and say.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We're back. Dow's up 24. S&P's up 95. S&P's up, 95 cents. And we are on with Scott and Safety Harbor, who's done really nicely with stocks, educated us, done very well, just buying and selling, buying and selling, buying and selling. And now I'm going to make the suggestion because he wants to do something with options. There are two things that I'm going to do. I'm going to give you the option play that strikes me as one that is both a learning experience, because if I gave you something that was out the money, say I gave you a 128 call for January and you paid $1.03, and everything just works out perfectly, and all of a sudden you're looking at Facebook retesting its high of 133.50, and now you've got a 300 to 400 to 500% increase in your call. That's just the wrong way to do it. That's what many of us had in our first experiences at options, and then it's downhill from there if you don't develop a really strong discipline. I'm going to give you something that's almost like playing it as and you're looking for the 120s. I think it's going to test the 116 to 114s before it stays in the 122 to 124 area. I think it's going to have to do some testing. This is you can write this down because there's no rush to do it. If you want to do something, are you looking at this that you think that next week we're going to the 122-ish area?
No. I think before February 1st we're going to hit it's going to test the 120. It'll be at the 119 range.
We're on the same page. Yes, my recommendation.
But if you're thinking it's going to go the other direction first, I mean,
yes.
That's a different story.
So no, but wait a minute. What I want you to do
with
is
an option, I guess it doesn't matter. I'm not buying it, so it doesn't matter.
You're not going to buy it until you see Facebook trading in the 116.30, 116.15, 116.30 to 116.50 area. If it does that, I want you to buy the 115 February call, and you're not going to buy it until you put in your price, because I think if it breaks 114, it can go even lower. So I'm thinking that if you can put in for 115 call for February, you want to buy it under 1. And right now it's off the chart. Right now it's probably it's probably about $7 right now, $6.50. Not interested. I want you to put it in, and it'll be good until canceled. And you put it in for 115 February call at $1, and just sit back and wait, and let's just see what happens. Okay?
All right, sounds good.
Okay. Now, if you want to do something differently for the shorter term, I'd have a different plan. But talking February, that would be the third Friday of February. That's the plan, and let's see what happens. All right? And you can even just write it down, and as you see, Facebook, if it starts to come down, breaks 116, still not good enough. It'll have to break 114 before you get it at 1. That's the way it's going to work. And then you're just going to sit with it, and it's going to be an experiment in decay, and it's going to be an experiment in the increase in volatility as emotionally it gets close to your number. What happens to that price? I want you to follow it, put it on your chart. I want you to look at it all the time. Once you get it, you're going to learn so much just by owning it. And the other thing is, I'm going to insist that you listen at any day. It doesn't have to be every single day, but listen to the swim lesson from Think or Swim with Kevin. He does a fantastic job. They really do a great job of explaining options. That's the thing that you want to do. Just savor it, learn from it. Practice, write down what you would be doing. Go to your chart. If you can get a demo chart that you can use with an option that is just demo. In other words, you're not doing it live. You're doing it as a demo, a learning experience. That's even better. And I'm telling you that watching it in that way, watching the emotion. In fact, what you could do right now, watch the 120 put, the 120 December. What are we down? Yeah, watch the December 120 put and 100 December 120 call, and just watch the two together and watch it in relation to what Facebook does intraday. Today it's up $1.34, meaning that the 120 put must have been looking great early this morning. Then all of a sudden, it's shrinking and decaying. And the 120 call must have looked terrible, and now it's looking very good. That's the emotion. That's what you really want to understand in options. How does the premium expand or contract? Much of the time, it's the emotion of a move, and you won't get that until the move actually breaks a certain point. Like if it came off this morning in the beginning, there'd be disbelief. But now that it's getting closer and closer to 120, more and more people are buying it. That's the way it is. So I think you're going to learn so much. It'll be the exact equivalent of what you do in your stock analysis, the way you look at stocks and you try to do it.
You really reminded me of the way that I actually trade stocks.
That's
so
the way
you very
you think.
Much for giving me another virus now. I'll have two things.
That's fine. I know that you'll do it thoroughly. So let me know how it goes. Okay. So you're not doing anything right now. You're going to wait for it. But in the meantime, just follow the 120 put and call December and watch how they move.
Basil. You are just an encyclopedia of information. Thank you so much.
Well, thank you very much. So have a great one. Have a good one, Scott. Thank you so much for calling, and let me know how things go. So that's Scott back in Safety Harbor, Florida. And okay, now let me go through a couple of things here. I showed you the gold, showed you the dollar. The dollar was actually doing exactly what it should have done yesterday, actually. I couldn't understand why it was such a wishy-washy day. It's doing it today. I love the fact that the dollar and the market are moving together. Now, let me go back to what I was talking about. When we were talking about, let me show you this here, because I'm all about the charts. I'm all about trying to educate, because that's what I love doing. Sometimes I do it at the cost of my own position sometimes. But I just wanted to show you the power of this rectangle. Look how it's dragging the price down. This is the 10-minute chart. Because it broke below all the left side lows, this has to be A. That had to be B. I've got a new technique that I'm working on. It's called a B1 and a B2. I'm not going to get into it right now, but this is a C. I could have said that. In fact, I'm going to do that now. I meant to do that for subscribers, for the people that we were working on in the webinar on Tuesday night. But I thought it's getting too complicated. I want things to be very simple and then slowly add the more complex things. I believe this can be called peak C1, C2 in the Chapman wave. That says, be careful. We might have made the equivalent of a D right here. Look, ABC, ABC. So it's like a double top. I think that much of the move has been done, and I do anticipate that we probably will get something like a doji candle, making tomorrow's action really important, looking out for next week. All right, now let's get back to the nitty-gritties. What about the TLT? Oh, my. The TLT is down $1.38 to 119.0T. This is the iShares 20-year Treasury bond ETF. But wait a minute. That's not such a big deal. Here's the trend line that we looked at. You remember there's a technique that I developed a long time ago. It's called parallel tracks. And this says that it's a time price thing, but you really want to use it as an angle. In other words, the diagonal. And now look what's happened. It made an exact from the 27th of December of 2013 in the weekly chart of the TLT to the low that was made on the week of the 26th of June at 114.88, having gone to a second peak E. We've just done a peak E right here, and we've got a time match, and it's broken the time match by 2 weeks. And that says, be careful. I think rates are going to remain high just a little longer, and then we have to test things. I'll be back. Basil Chapman, Target Technicians Hour. Dow's up 10, S&P's down 0.62 after a whopping big move yesterday. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I wanted to do this yesterday, and you remember I could not recall the name of what the commodity symbol is. It's lean hogs. I said it was a hogs. I just couldn't remember exactly what the symbol was. It's LH. Well, look at LH. This is the continuous contract. Look at this beautiful doji candle right at the low of the 19th of October. And it goes peak A right on the moving average, pulls back, breaks above it, goes to B, can't hold it, pulls back, and then goes to leg C, way above everything. MACD's increasing, stochastic's pulling back, and then it suddenly rallies, lets it go to C. Then the MACD holds beautifully because the MACD is the momentum indicator. The stochastic is I call it the torque. It's what really gets things going, but the MACD has to keep things going. Now, look what happens. All of a sudden, it was yesterday I wanted to talk about it because the day before I said, this looks fantastic. Then I forgot what the symbol is. I said, it's gone to leg D and it's still looking good. And look what happened. Big day yesterday and a huge day today. And now it's hitting the 200-period exponential moving average right there at resistance. First time since it broke down below it back in July the 6th of 2016. So this is very important, and it says that at this point it can go a little higher, but it's going to probably go in the next week and a half, go chop, chop, chop between 61.6 with a high of 62.5, maybe a touch of 63, 64.35 is the 200-period simple moving average. I don't know if it even gets there, but it's somewhere in this area, maybe 2 points higher and 2 points lower, and then it could chop, chop, chop around until it finds it establishes a better weekly. This is leg B in the week until it finds a really good support. Support is back at 58.92, the low of August of 2016. I just wanted to go through that because it's fascinating that some of these commodities have been just hammered, and all of a sudden their weekly and then their monthly charts start to improve. Now, I wanted to do 2 things. The first thing is I wanted to finish up here with crude oil, because crude oil has made a peak D in the daily chart. The USO, remember, made a peak F, I believe, on the left side. Yeah, 1179, came back down to the left side, right side price time match attempt, but it failed, and it's failed at peak D. And the peak D is lower than that F. That's not a good sign usually. At 1163, and says it's going to be chop, chop, chop. I think that the USO for the next week and a half is probably stuck between 1155, 1163, and 10 1082 to 1073. I think that's probably the trading range I'm really watching real closely. Okay, that was that. And then we were on looking at the TLT. So this is very important. The TLT has broken key support level of 200 period moving average in the monthly. It's just nibbling and broken a tad that trend line that I said was very important. And the monthly chart is really the issue. The monthly chart, everything about it says it's not E/C. It is really going to be an E. I have no choice. I have to wait for December to finish. But I really think that it's looking to me like yields have made a significant low, and we are moving into a different area of yields, TYX.X. This is the 30-year, making a high-level consolidation. There's that 200 period moving average. This is 5, leg E, Chapman Wave 5 in the weekly. So it's going to be very interesting. I had a couple of questions, actually a number of questions about yields. What do I think is the Japanization of our bond yields intact still? And I'm saying, I'm just looking at the trend lines and things. And at this particular point, there are all the requisites that are needed to be able to say that it's been 31 years, and after 31 years, something else should happen. But I'm not sure yet if we're going to go to the inflation area. And that's usually the opposite of what we tend to see. And we've gone from one side of the channel, correct? I mentioned that I've gone from one side of the channel to the other side of the channel. But look at this monthly. That's the monthly channel. We've gone to the top part. In fact, it always gets smoothed out. I'm going to raise this a little bit here because it gets smoothed out, and I'll put it in there. It hasn't quite gone there. It's in the Chapman Wave inside track, resistance, repellent zone. If it can break above, all I'm saying to you is daily, weekly, monthly. All right, we're going to go. Let me see what this says. TLT. So this is the Chapman Wave projection chart. 110 is major support in the monthly. We've gone down below 120 in the weekly, and a whole area of 118 to 117.5 is really important in the shorter term. So I'm watching this very closely. Let's go to the TBT, and the TBT on the upside should tell you, yep, the parameters is at 41.21 up 92. That's the inverse of the TLT, and it's 41.78 is the strong daily reversal. 41.41 to 42.22, the 10-minute, and 42, the whole 42 area, whole 41.80s to 42.20s is going to be major resistance in the TBT. So now we know more or less the parameters that we'll be looking at. So I'm just letting it play out. We don't have any position. So now let's do something else. I want you to say that. Oh, high-grade copper. High-grade copper is very important. Why? Because I'll show you why in a minute. Because it had such a big move, it was almost foretelling that there was some kind of a rally coming up. But at peak F in the daily chart, leg E probably a peak E in the weekly chart, huge leg B in the monthly. I think copper is going to chop around here. But it's at 2.628. I think it has a chance to go slightly higher. I'm saying that the 2.75 to 2.83 area on the upside is probably going to be the limit. And on the downside, there's really good support between 2.53 and 2.50. And it might just chop around here for a little bit. It's had a big move now. The other thing is HGX, leg D. Finally, we've got our leg D in the Philadelphia housing sector daily. This is leg B in the weekly. That is a big positive. Even with interest rates, they are still historically low, even though they've really bumped up a lot over the last, I'd say, 2-3 months. I think mortgages now, they were, I think 3.50 you could get for a 30-year. Now I think it's about 3.62 or maybe a little bit more. But look at this, the monthly chart is improving, and I'm suspecting, now, if this is going to be a true bull market, in other words, the period of recognition has begun. That means that sell-offs are going to come because of some external thing, Europe this or the Congress that. It's going to come from something that just comes as a big surprise. And if that's the case, then what we're looking at is that they're going to be short, really sharp, and vicious, the declines. And then we just work our way back up again, just forcing more and more people into the greatest bull market that we've seen. That's my impression. Now, I'm starting to get ready for the short side. I haven't got any yet. We do have a short. We had a short that was doing fantastically on the downside. Well, we short the IBB. I was questioning the den about the IBB. Yeah, the IBB is down another $1.53 at 264. This is going to be a slow progression to the downside. Just try to rally them, boom. Try to rally them, boom. And that's that arch formation in the weekly chart. But I do have targets to the downside between 220 and 200 looking out a couple of months, maybe more than a couple of months. But what's really interesting about this is that you can get vicious upside moves. Remember, look at that vicious move in the IBB when we were short. No, when we were short, I don't remember. And then there was, the big spike up. But look at this, EW. We've been short since 121.41. All-time high was 121.75, 30 cents higher. It plummets down to the 81s, and today it has a big move of 6 points. But it's still looking terrible. This is Edwards Life Sciences. But maybe there'll be a bit of a rally here. All right, we'll be back. Dow's up 29, S&P's are up $1.27. Hold tight. There's the last section coming, and I'm going to answer.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, so a question about the HYG. Of course, this is the yields. There's the junk bonds, the JNK, and the HYG. They kind of go together. This is in leg C. And it says that people must be buying these much higher risk. This is a nice gap to the upside. Look, there's an item reversal. So HYG suggests in leg C, maybe a peak C today. It could go a little higher to peak D, but at 86.32, down 14 cents. I'm going to be watching it closely, because if it does in 2 weeks' time, we've looked back and it hasn't broken 85, But in fact, what it's gone is broken 87. There's a good chance to test the 87.63 area, the 200-period exponential moving average, and try to break to a leg C in the monthly chart. I'm going to do a lot of work this weekend on bonds, because I think there's going to be a very important few weeks coming up that applies to the market, to bonds, to dollar, to gold, a whole bunch of things. So yes, and junk is the same thing. J and K, it's an leg C, it's the same pattern. All right. So I'm been watching both of those. Good question, Bob. Next one was, would you short? No. And I do nothing right now with TLT or TBT because it's just a little too tricky. And I would just hold off because it's very important to let things, they're resting right now, okay? Sarah asks, XLF is in leg. Wow, G/C with the doji candle. I think that, whoops, didn't mean to do that. I think that we're getting very close to some kind of a consolidation. Now, I have said that there's a chance that we could rotate and then move to higher ground based on the Dow, but I'm saying that's just a chance. What I'm doing is we're going to raise the stop in our Dow long. We're going to raise the stop in our IWM long. I don't want to take any risk now, but I'm also going to be thinking about, do I want to hold these things because we got in at such nice prices and take a chance that there is a pullback and then we go even higher? And then I would rather add. I'd rather have a core position if I think that 2017 is going to see some higher prices. So XLF, just be a little careful here. I wouldn't be shorting. I don't see any reason why you want to short just yet unless you're a really good trader. If you are a trader, you think you're shorting, maybe tomorrow in the morning session, my Chapman Wave analysis on a Friday, we'll do something about that in greater detail. There's no question that it is extended. The BKX index is parabolic but it's only in B, in the monthly chart and in the weekly chart. So absolutely. But I just be hesitant because you can still get those sudden spikes to the upside. That's really my issue right now. So if you're a trader, I don't want to do it now. I'll do it tomorrow. I don't want to do anything at this point because it's still looking quite strong. So yes, as a short-term trader, you can have 3 days of a very sharp pullback, and then maybe even a week of just chopping around to the downside. But it's still looking very strong. Judy wants to know about CVI. CVI. I don't think I've ever looked at CVI. CVR energy. This is A, B, C. It looks very strong. Man, look at these charts. If you didn't get in, you're just stuck. All I can say is that 24.44, I'd have to wait. If you got in, you could get in now because the weekly chart and monthly chart are so strong, but you'd only be able to start a position saying, I just want to be in because I want to watch it more closely, so I'm getting 25 shares, say, but I really want to look at it closely. For 24.42, if it breaks 21.50 in the next 4 days, 4 sessions into next week, late next week, then I want to see how it handles the 20.80 to the 19.30 level, if it's going to get there at all. If it holds steady and refuses to break 21 all of next week, that's a very positive. Thank you for bringing that to my attention. And that's, yeah. So we're about to wrap up Thursday, and have a wonderful day. I'll be back tomorrow. And please check out, you might want to do my 3-part series. Look at the front page of TFNN, or you can just give a call to the office and you could join up because we did that. It's just been archived. It's on archive now. People have just started. Couldn't go to the Tuesday night session or starting to archive it. So you'd be in the same position. And December the 20th is the next one. And it's going to be really comprehensive with the MACD and stochastic. And then you get the third one where I put all together with time frames and everything. Man, I'm excited about this. Have a wonderful day. I'll see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.